Good morning. Welcome to Market Day Report. Welcome to almost the weekend. Right. Okay. We've got a couple of reports set to come out on Monday. Will we see much trade ahead of those? Those two reports being the grain stocks report, and then we also get the end of the month. It's an annual report from USDA, acreage projections, and that's coming up on Monday. Right now, let's go to the markets. How we traded in the overnight session. The corn market down 3 1/4 cents at 4.40 1/2, and this is after a lower trade yesterday. Now, soybeans moving higher. The entire soy complex moving higher yesterday. Don't know if you caught it, but Arlen Suderman earlier in the hour explaining part of the reason why. But we're off in the overnight session, 10.18 1/4 down 2 1/4. And to the wheat market. Wheat market for Chicago was lower yesterday, July, down 9 in the overnight session, 5.38 1/4, while Kansas City and Minneapolis both went higher yesterday. Overnight session, 5.66 for KC, down 13 3/4. And spring wheat, December, off a nickel at 6.29. Cotton market yesterday was higher, but lower in the overnight, down 17 at 70.20. Let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. All right, Brian, those are the numbers from the overnight. What do you make of them?
Well, good morning, Tony. We're off to a slow start this morning with new contract lows in the wheat, corn pushing to new lows for the move. And, part of it has to do with what we're going to see on Monday. I think we're kind of positioning ahead of that report, expected to see an increase of corn acres. And I personally think we're going to see far more than the 94.4 million acres that the trade is expecting. That's barely what we planted 2 years ago. I think we not only go to that, we exceed that, maybe 95 and a half, and we've only planted 95 million acres or more twice in our history, and I think this will be the third time we do that. The market's anticipating that as well. We saw soybeans rally yesterday, maybe some positioning ahead of that report, but certainly no follow through overnight. And then we have wheat contract lows once again. Now, part of it, I think, can be blamed on forecasts for good rain in that soft red wheat belt pushing Chicago to contract lows, but also look overseas. There's rains for the Black Sea wheat regions, a lot of rain being forecasted there. And then you also talk about Russia and Ukraine, maybe some sort of a ceasefire and opening up passageways. That has global economic implications on the bearish side because it increases world supply of wheat and corn being shipped out of that region because the insurance costs will be less costly. You'll have really no restrictions anymore to ship that wheat out. So that's, I think, really starting to put pressure against the wheat, and it's also weighing on the corn market. So we have a real struggle this year going into 2025 for the U.S. farmer. They are going to have to bet on some sort of a weather issue to give prices at a higher level that will at some point maybe give us some more selling opportunities, because right now these aren't real attractive pricing opportunities. But if we get weather and some hot, dry stretches or something, then maybe we can see these markets rally and appreciate, funds step in and buy instead of being sellers that they are today.
All right. Speaking of rallies, there was a market that has really taken off. We thought it had taken off until this past week. How about we take a break? We'll come back and talk about that market in just a moment. What market is it? Well, stick around, find out. Market Day Report continues in a moment. Okay, I'm just kind of curious here. Had we told you maybe a month ago that cash cattle would go for 208 in the south and 213 in the north, those would be offers out there, and you might not take it. Would that surprise you? It kind of surprised me, but with the market moving higher, those bids are maybe out the window. Asking prices are exceeding 208 in the south. We sold some cattle already at that level, and then 213 in the north. Looks like packers will have to really pay for them next week. They're going into next week with not enough cattle to process for for their weekly slaughter. More on that in a moment. Let's get to the markets, how we finished yesterday. Yep, this is the market that took off. 209.92 on the high side for the April. 209.55 is where it settled, up 247. Even strength in that June at 205.80. That market will open up in less than 10 minutes. Feeder cattle yesterday riding along 287.55, up $1.67 on the front month. And the hogs under pressure yesterday. The May contract 88.85, down 67. Let's bring back in Brian Hoops, Midwest Market Solutions. All right, I kind of teased it there, but we're hitting new records.
Yeah, you did tee this surprise up pretty nicely. There's, I think a surprise in the hog market as well that we can talk about here in a second. But this cattle market, what really impressed me this week is the fact that we've slaughtered 45,000 more cattle this week, and yet the boxes haven't broken hard at all. They've been stronger for most of the week. That's a sign that there's still good consumer demand. There's a real concern out there from a lot of people in the industry that at these higher prices, that the consumer's going to back away and you have to get aggressively hedged. And I'm not in that camp. I think the consumer demand will still be there to an extent. We may start to lose a little bit of exports, and we saw that yesterday in our export sales numbers. They were down quite a bit on the week, but yet consumer demand, I think, is going to be there. And you look at these box beef values, they're holding in there strong. When we increase the slaughter pace like we have this week, usually that weighs on boxes, and it didn't happen. So we're going to see packers pay up for the cash market this week. They have margins to work with, and we're seeing a very strong futures market now as we go into the second quarter. Numbers expect to get even tighter. There's just not enough numbers out there to meet the demand that we have, and that bodes well for a bullish market. We're going to have dips like we've seen. We're going to have maybe corrections 10, 12%. But we will see these markets come roaring back like we saw this week.
All right, Brian, about 30 seconds here, but is it a supply-demand issue when we talk the gold market? Again, more records there.
Yeah, I should mention the hog market. We had a quarterly hog and pig report out yesterday. It came in below expectations across the board, in the 99 to 98% range. It was kind of a bullish surprise. So look for the hogs to try and rally here. Gold market is moving higher, and we're targeting probably 3,500 as a potential target for that gold on the upside.
Wow, hard to believe. I would have never guessed that 3 months ago. Brian, great to see you. We'll see you here on Monday. Brian Hoops with Midwest Market Solutions.